It's the Traders Podcast here at Courage Pays Better Than Fear Trading. I'm your host, Jeremy Hritz. Excited to be with you for episode number 32. I've been in the lab. I'm in the process of revamping the entire YouTube channel, and there's going to be tons of content coming your way. We're talking daily videos because I don't even know what the hell I'm doing here. And I figured, you know what? It's time that I actually learn what to do, how to create a YouTube channel, how to actually make videos so that they're not as amateur-ish as they are. So I've been studying, I've been hard at work, and I'm excited for what's going to be coming over the next couple of months. And I also have a big announcement, something that's going to be available to all of you out there for free. It's going to be something pretty special. I haven't done anything like it before, but stay tuned for that announcement in the next couple of weeks as I start to roll some of these new things out. But most importantly, it's good to see everybody. Grateful to be back with all of you here. We're in the month of September. The dog days of September, you could call them, or the bear days, because September historically, typically is a weak month for the stock market. And for all of my trader friends out there, or people who follow the market, you've seen how volatile it has been, up, down, these big wild swings that we've had. And if you're not quick, you could get wrecked pretty quickly, whether you're a bull or a bear. Right? We'll have some days where we're spiking up and then automatically we'll sell off, or we're selling off. It looks like we're dropping hard and then it gets bought back up. So it makes for some fun, but typically September and October, those can be rough months before we move into what are the best months of the market. But we'll talk more about that later. And today's podcast, I want to talk about the importance of record keeping and tracking your data, your performance as a trader, and why it's important. And this little wrinkled piece of paper that I have right here, I'm going to talk about this too, and how this really helped change things for me in terms of my trading. So that's going to be today's topic, and I'm excited to share that with all of you. And we're also going to cover Ask a Trader. We'll take a look at Mr. Roku. We'll do all those things. So I'm excited for all that here today in episode number 32 of the Traders Podcast. Let's go. Okay, so we'll begin with a quick Ask a Trader segment here. And one of the questions that I get asked quite a bit, and especially after the last episode that I did for number 31 about presidential elections and the markets. And the question that I've been talking about with people, or that I've been asked, is how does an election, or more in particular, this election that we're headed towards in November, how does that impact the market in terms of the candidates and not knowing whom will be the next president of the United States? And that answers it all right there. It's the uncertainty factor. And if you've listened to the podcast since we've started, you've heard me reference several times that the markets do not like uncertainty. They hate it. They despise it. It is not good. The markets want to be able to point to concrete things and to be able to have something specific that they know the outcome, right? And when you have a campaign battle going right now between Harris and Trump, and the race is tight, we don't know who's going to be the winner, there's uncertainty in the markets by market makers to know, okay, hey, this person's going to be directly influencing financial markets, the economy, with these types of policies. That certainty can't be obtained. And so that's really the biggest factor right now that market makers are dealing with. They're trying to get an edge, right? This is what they do. They predict, they study the data, and they try to forecast out 6 to 8 months, sometimes a year out. And you see that factored into the price of the market these days. But they're trying to figure out who is going to be the next U.S. president. And because there is uncertainty, because nobody knows, because it is such a tight race, that's why you're seeing the volatility that you're seeing right now. Now, there is the seasonality factor of it being September. But remember, anytime there's uncertainty, go back to when your inflation reports, they drove the market like crazy. Now, they did drive the market pretty intensely this morning. It dropped really hard and then got bought back up. But eventually, once that gets settled and taken care of and inflation gets back down to 2%, their target, you'll see things kind of mellow out there. It'll be the same thing with the election. Once a decision is made, the American people vote, and a presidential candidate is selected and elected, then that will bring some certainty to the markets, which they like. So that's really when we talk about the election, especially right now, because it is such a tight race, there's uncertainty. The market doesn't like that. And that's partly why we're seeing the volatility that we are out there today. So that's the question I wanted to address here today. I want to ask a trader. Hopefully you got some value out of that. But today's episode, I wanted to spend some time talking about the importance of record keeping, tracking your data, your performance, and how that can help you as a trader. I did a podcast episode earlier this year where I talked about the importance of treating your trading as a business if you want to excel and succeed. And again, anytime you're using your money, your cash flow that you need to survive and to grow your wealth, you need to take it seriously. And part of that process is just keeping track of your data, knowing, hey, this is my winning percentage for the month. I won 55% of my trades. On average, my wins were X amount of dollars. My losses were X amount of dollars. You want to know that information so you can draw conclusions about your performance for each particular month. Now, some people might argue against this and say, well, you can't make money every day in the market. And that's true. You're going to have losing streaks. You're going to have losing weeks, maybe a losing month. That potentially can happen to you. You can experience that. But you can be profitable every month by following certain strategies, right? It's possible. You can do it through day trading and swing trading. And you need to set targets for yourself. What are you aiming for? We talk about the risk unit quite often when we're doing trainings or when I'm working with students. And that just points to how much are we risking on any given trade. So going into the trade, we know that if it works against us, we're losing $100 or $200, whatever that amount's going to be. Okay. So we know that going in, but we need to have clear targets for ourselves. What are we looking to make each day that we trade? And this might be opposite of what you've heard from other people who trade, who don't believe in setting targets, that it's just all about the process and executing the process. And I definitely see that perspective where they're coming from, where they'll say that you can't make money every day, which in some cases that's true, but in other cases you can have streaks where you are making money every day for a period of time, right? The losses are going to come. We know that. We've talked about that on the podcast. But I'm a big believer in having a target for yourself every day that you're striving for as you're trading. Okay, what do I mean by that? Well, if I go back to when I started trading, my goal, when I said that I was a professional trader, by now you should know my story. My goal was to make $396 every day via trading to equal what my paycheck was every 2 weeks, right, after taxes. And I set that target for myself. And what that helped me do was know, okay, 396. And as I'm trading, and let's say I took 3 trades that day, if I hit my target, I had reason to feel successful. Okay. And sure, all it might sound nice. Oh, well, I followed my process and I feel good about myself. No. Yeah, I followed my process, but trust me, I'm doing this because I want to make money. And by having those targets in place, you're able to see, are you actually making progress towards your goals, right? So 396, if I made $100 that day, I still felt good about myself because A, I was positive, and B, I was able to see on paper on my computer screen that I had generated profit from the market. Now, I didn't hit my full profit target if I made $100, but I made progress. And then on those days when I actually hit the target or exceeded it, I felt even better about myself and my confidence grew. And so having that target just sets the intention in your brain that this is what I need to hit. One of the other arguments you'll get against setting targets like that is that it's limiting, that, oh, well, if your goal was $396, you're not going to make more than that. Again, that's all wishy-washy, new agey, pie in the sky kind of nonsense. I had that $396 target, but I had days where I made well beyond that, 4, 5, 6, 7 times that at that juncture. So that's nonsense. You have to have that target set so it will drive your behavior and you're able to measure your progress as you go. And the other piece of that is just writing down every day. And I have a profit taker tool I'll put right there. You could see for every day that I'm trading, I'll type it in what my total was for the day that I won or lost so that I'm able to see my results. And the days when I didn't hit my target or that I lost money, did I feel bad? Yeah, I did. But I use it as an opportunity to learn. And I reframed it for myself to say, hey, yeah, it was a red day. I lost $300. But what can I learn from this? Where did I go wrong with the trade? And that's how I used it. And we don't want to run away from those losses or say, oh, well, there's a moral victory because I follow the process. No, what can I learn from the loss? And we know that that's something that's part of this game, but we have to study that and learn from it. And then one of the biggest things that really helped change me and my mindset when it came to trading is I made this little chart here, and I'll actually flash this up on a screen here while I'm talking about it so you could see it. But it's labeled the Trading Daily Weekly Profit to Yearly Equivalent Chart. And you can see, based on what you're generating per day in terms of profit, you could see what that would equal to in terms of the weekly profit and the yearly profit. So here, $119 a day, if you make that trading per week, that's $595 a week. That's $30,000 a year, right? That's not bad for a little side hustle, right? And as that number bumps up, you go to, let's say, $694 a day, which comes out to $3,472 per week. It's $175,000 a year. And as those numbers start to grow, as you excel and become better at your trading, let's say that you're hitting consistently $1,984 per day. That's $9,921 a week. That's $500,000 a year. Okay. Those are targets down the road, obviously, but this tool helped me because if I had a day where I made less than what I wanted to make, I would come to this chart and say, okay, I only made $496 today. Well, I had to change the way I was looking at that. Number one, I had a profitable day. And by looking at this chart, I could see, all right, $496 a day. If I did that every day for every trading day, 252 trading days a year, that's $2,480 a week. And that's $125,000 a year. And so this really just helps set my perspective to understand that, hey, you're not going to have huge winners every day. You're going to have losers, but know that a positive day, positive cash flow, even if it's 119, that's 30 grand. Even if it's $50, if you're doing that consistently over time, you're a profitable trader. That stacks on itself. It builds. And so I'm strongly encouraging you, track your data, reflect on how you're doing, have a tool like this to look at, to see at the end of your day, hey, this is how I'm doing. And you're probably doing a little better than what you thought. And that's one last thing that I'll say. Don't go for those home runs all the time. Focus on those little base hits, $50 here, $100 here. That stuff builds on itself. And every once in a while, after you have a string of singles, you're going to hit that home run. Okay. So that's what I got for you here today. I wanted to share that with you guys. And the lesson, track your data, pay attention to how you're doing, draw conclusions, make judgments about your performance, set goals for moving forward, and see how that impacts your trading. But guess what it's time for now, ladies and gentlemen? It's time to take a look at Mr. Roku. Let's go.
One.
All right, so here we are, Mr. Roku, getting it done today, pushing pretty hard. We could see we had that big move back on August 23rd, and then we drew down a little bit into the 10 EMA. And today we're getting a nice push, the whole market really, and it's finding some resistance here at the is that the 200? Let me check here. I think we have the 50 EMA on the weekly and the 200 SMA on the daily. And again, we talked about this. If it could break through here, there's not really much above it. And I did have this target for Friday, September 5th, which it obviously didn't hit. That was $80. But you can see if it goes through here, guys, there's nothing. Right? So there's definitely room for this to run. Once it fills this gap, which it has yet to do completely, there's another gap above it that will take us back up to the 90s where it was this past February. So Roku's finally doing it, right? Very exciting here. Good for this little guy that could. Very proud of it. It's like my son, Roku, right? So it's pushing. It's above almost all of its moving averages. 2 more to go. And then nothing but smooth sailing for this guy. And don't forget the rate cut is coming next week from the Fed, Jerome Powell. So we'll have to see how that impacts the market. And so, ladies and gentlemen, that's going to do it for episode number 32 of the Traders Podcast. So grateful and thankful that you're here with me. Again, be ready for the changes that are coming to the channel. Very excited. And I got a brand new experience coming up here pretty soon that's going to be free. Stay tuned for that. Like, subscribe, share with your family and friends, drop a comment, and I will see you for the next episode, number 33 of the Traders Podcast. Take care, everyone.